You spend years working, saving every spare dollar, making smart investments, and finally reaching a point where you feel financially secure. You buy the house, you secure the assets, and you watch your net worth steadily tick upward. Then, a sudden medical emergency strikes. Within hours, you are staring down a hospital bill that completely wipes out a decade of meticulous planning, forcing you right back to where you started. Every single year, millions of people who thought they were comfortably middle class are pushed directly below the poverty line for one reason: out-of-pocket medical expenses. This chart shows exactly why relying on cash savings is a losing battle. The flat line represents average middle-class savings growth, but this sharply spiking curve is medical inflation. Healthcare costs are rising at a staggering 14 to 15% annually. A procedure that costs $200,000 today will easily exceed $500,000 in just a few short years. Sustainable wealth building begins with a robust defense. A dedicated medical shield ensures that a single health crisis doesn't undo years of growth, keeping your capital safe and your future secure. That shield is health insurance. At its core, it is a simple mathematical agreement. You pay a small, predictable yearly premium to an insurance company, and in exchange, they absorb the massive, unpredictable financial risk of a major hospitalization. Many assume government safety nets will catch them. Programs like India's Ayushman Card provide excellent free healthcare, but they are strictly designed for the most economically vulnerable. If you earn a middle-class income, you are entirely disqualified. This makes private health insurance strictly mandatory. Without coverage, a medical crisis forces you to liquidate compounding assets. You end up selling stocks at a loss or breaking fixed deposits just to generate cash. A good policy ensures those investments are never touched, allowing your wealth to compound uninterrupted. The premiums you pay also work in your favor. Under tax codes like Section 80D, health insurance premiums reduce your taxable income. You pay less in taxes, freeing up capital that you can directly reinvest into your portfolio. Securing your medical coverage stabilizes your financial foundation. With the threat of bankruptcy from major hospital bills neutralized, you gain the confidence to take the calculated risks in your career or business that drive significant growth. Buying the wrong policy is dangerous. Before you sign any contract, you must verify 6 critical parameters to ensure your shield actually works. First, demand a policy with no room rent limit. If your policy caps your daily hospital room cost, they will also proportionally deduct payment for your surgeries and doctor fees, leaving you paying a massive percentage of the final bill out of pocket. Second, insist on a 0% copayment. This ensures the insurance company bears the entire financial burden of the claim, rather than forcing you to split the cost of the bill. Third, medical bills don't just happen inside the hospital room. Ensure your policy covers diagnostic tests at least 60 days before admission and recovery costs at least 90 days after discharge. Fourth, look for the shortest possible waiting period for pre-existing conditions, ideally 2 to 3 years before full coverage kicks in. Finally, verify that the company pays out on time by ensuring their claim settlement ratio is above 95%. Combine that with a strong no-claim bonus, which actually increases your coverage amount every year you stay healthy. A strict warning: never hide your medical history. If you conceal a pre-existing condition during the application, the company will instantly void your policy, exactly when you need it most. Tell the truth. You also need to know exactly what is covered. Essential medical treatments, ICU charges, road ambulances, and even alternative Ayush treatments are generally included. However, cosmetic surgeries and any non-accidental illness occurring within the first 30 days of the policy are strictly excluded. When choosing a provider, the market is split between general insurance companies like HDFC Ergo or ICICI Lombard and standalone health insurers like CareHealth or Niva Bupa. The ultimate deciding factor should be the strength of their local cashless network. You want a provider that partners directly with the major hospitals in your specific city, ensuring a transparent, frictionless claim process where you never have to front the cash yourself. To avoid hidden clauses and agent bias, skip the offline middlemen. Utilize transparent online aggregator platforms like Didon or Policy Bazaar. They allow you to compare terms clearly and often secure a cheaper premium. Imagine facing a severe family medical crisis. Instead of panicking over how many shares you need to sell, you calmly walk up to the hospital billing counter and hand over your card. The bill is handled. Your family's assets remain untouched. True wealth requires rendering your financial foundation immune to life's worst surprises. Don't leave your hard-earned investments exposed. Secure your health insurance shield today.